Welcome to Market Catalyst. I'm Jared Blikre. We are 30 minutes into the trading day. Let's get to the three market catalysts that we're watching this hour. First up, we bring you the market outlook for 2026 as stocks kick off the year in the green. Plus, Nvidia CEO Jensen Huang and AMD CEO Lisa Su, they prepared to take the stage at CES. We're going to bring you the three things you need to know ahead of the tech conference. And we're also going to hone in on the state of the consumer and what it means for the travel sector in 2026. So let's get straight to those markets. And we're seeing some green, especially in tech today. The Dow has been hovering around the flat line here. It's up modestly right now. You can see 48 points, a little red, a little green there. But let's take a look at the NASDAQ, where tech is soaring on the back of chip stocks. We're going to take a look at that industry in a second here. You can see up 1.3%. S&P 500 up about half of that. Very similar looking chart. We'll also get to the Russell 2000 here. That is up 0.2% and just a little bit off of those highs. And we also want to check in on the bond market as we start the year here, up 1 basis point. This is a 10-year T-note yield of 1 basis point to 4.17%. 30-year up a similar amount, just a small one, to 4.86%. And the US dollar index slightly in the green today. And as far as sector action, not surprisingly, given that backdrop, we see tech, XLK, that's a large cap ETF. For tech, that is up 1.7%. The only outperformer from the S&P 500. Also taking a look at industrials, materials, utilities, communication services, consumer discretionary, all of those in the green. So cyclical is really doing well here. Real estate, financial, staples, healthcare, and also energy, just slightly in the red. Looks like a defensive kind of move for some of those defensive stocks there, so we're not going to make too much of that. And here is the NASDAQ 100. We haven't seen this much green, especially in the mega caps, since last year. And I know that's a small statement, but it's been a few days. Nvidia up 3%, Apple up 2%, Alphabet up 2% as well, and Broadcom up nearly 4%. Microsoft just slightly in the red, under 1% for those tracking its performance today. And also, I want to show you the green on the screen here when we take a look at the chip industry. Already went over some of these names, but some of the outperformers here that didn't go over: Micron up almost 8%, ASML a little bit more than that, Lam Research, Applied Materials, Intel, all of those up more than 5-6%. So really the chip stocks powering a lot of the move today. Not the case with software. So it's kind of a bifurcated tech market today, although Oracle in the green for 1%, Shopify up 2%. And I'm going to leave us on the transportation sector or industry here because, and these are all the Dow transports, by the way, we're going to be talking about the airlines. We're going to be talking about the cruise lines in just a few minutes. You can see Uber, the biggest of the group, up about 2%. And the bull market has entered its fourth year, and if the gains continue, it's going to be the longest winning streak for stocks this side of the pandemic. And joining us now for the trends in stocks to watch in 2026 is Caleb Silver, Investopedia Editor-in-Chief. Caleb, this is great. My first interview of the year. You have been a staple of Stocks in Translation. Let's start with your big picture outlook for 2026 as informed by some of the Investopedia readers, perhaps.
Yeah, readers, individual investors, those we survey, those that come to Investopedia, are pretty confident going into the end of this year, and why not? And end of 2025, I should say, and why not? They've had pretty substantial gains. And you and I have talked about this. Individual investors, retail investors, kind of stuck with it through all the tops and turns that we saw in 2025, through all the tariff craziness, through all the big dips in the big mega cap tech stocks. They kept buying, they kept confident, and I think they're going to continue to be so going into this year. That said, they are worried about bubbles. They're worried about bubbles in the AI stocks. But as you know, they own these very same stocks that they're worried about, yet they continue to buy them. So it's this weird feeling of, well, things are pretty good and I've done very well, but I'm worried that maybe we've done a little bit too well. I'm not willing to change the composition of my portfolio. Ironic that on the first trading day of 2026, we see a lot of those same stocks leading the way.
Yeah, and we're going to get to some individual names in a second here. I just want to go over some of the risks. You've already highlighted some of those for the year. Midterm elections, another one of those. And, you know, we have this 4-year presidential cycle, and this particular year in which we had the midterms can be a little bit dicey, especially in the second, third quarter. That's just a seasonality play. That's history. Anything else on your radar or that you want to add to that?
Yeah, we got to watch the labor market. Everything else seems okay. We just got that first initial reading on third quarter GDP that blew past estimates over 4% there. So I think that we got to watch the labor market because the labor market will dictate the direction of the Fed. Even though we're going to get a new Fed chair by May, Fed Chair Powell's term ends in May of this year, and the president has promised to name a nominee. We'll probably get one pretty soon here to fill that chair. It's going to be a more dovish Fed. That said, if the labor market continues to weaken, the Federal Reserve, no matter who's in charge, will have no choice but to potentially loosen interest rates a little bit more, which could trigger inflation. So all these things are connected. That said, the labor market is the linchpin. If the labor market weakens, we get unemployment rate over 5%. Consumer spending is going to weaken. And that, as you know, has been powering a lot of the discretionary spending. I know you're going to talk about travel stocks and luxury travel. That's been really strong. But if the labor market weakens, you're going to see spending drop from the top all the way down through the bottom ranges of the income earners throughout the United States of America.
And the good news there, at least we're going to get the data on time, at least for the near future, I hope. I want to call up the Wi-Fi Interactive here. We have a heat map with some of the stocks that you are watching this year. And this is today's performance as we see it. We can see Constellation up about 5% there. I'm going to put a one-year look just so we see what these stocks have done over the last year. Berkshire Hathaway up 10%, despite, I guess this is the first day that Greg Abel is taking over for Buffett. We got Oracle there, Constellation, as I just went over, Robinhood up 185%, and then Strategy down about 50%. Let's go through them.
Yeah, these are the stocks that I'm watching pretty closely. Let's start with Oracle, the poster child of the AI overspend, potentially a lot of doubts going into the end of the year about Oracle's spend on AI, about its investments in OpenAI, but also a lot of concerns about its debt. Now, there's a lot of other companies to be concerned about. Oracle is a very strong company with a big market cap and pretty solid leadership. That said, this is the one stock that a lot of investors were focused on towards the end of the year. Is this going to be sustainable? Is the spend on AI going to pay off? I'm watching that pretty closely. Constellation has been doing very well as, you know, the de facto poster child power generator for the AI build out of all these data centers. So it's been an extremely strong stock. Is that demand going to continue? Constellation being among the biggest of the power generators providing to this sector. I'm watching that stock closely to see if that demand continues and if the enthusiasm among investors for these power stocks that are supposed to be powering the AI build out remains. And also Robinhood, one of the strongest stocks of 2025. That is a huge risk play. But Robinhood has been making some very substantial moves over the last couple of years. The most recent move is this move into sports betting. And you and I have talked about this, this slamming together of sports betting, probability betting, stock trading, day trading, crypto, DeFi, and 24/6 trading, tokenization. All this is coming together very quickly. Robinhood is right in the middle of it. Let's see if the investor enthusiasm for Robinhood continues as well. And then you just mentioned Berkshire Hathaway. It's the beginning of a brand new era. The beginning of a brand new era. The Buffett premium may have disappeared. The stock was up 10% last year, but the market was up much better than that. We'll see what happens with that huge cash trove. And we know Buffett's not going to just disappear and start playing
he's still chairman.
Bridge. He's still chairman. He's going to be consulted on everything, but this is Greg Abel's company now going forward. I want to watch Berkshire Hathaway. So many people have become millionaires and billionaires with that stock over the past 50 years.
One more here. I don't think we got to Strategy. So this is a stock that was kind of bucking the trend of all these other winners here. So, and this is a stock that was just, I'm going to show, that's a one-year chart. Let's show the 5-year chart there. And you can see this is, it's looking kind of bubbly there in 2025. What do you think this portends for the next year?
Well, remember, Strategy was MicroStrategy, but then Michael Saylor said, I'm going to go all in on becoming a Bitcoin treasury. The problem with becoming a Bitcoin treasury is that that's your balance sheet. And even if Bitcoin is down, what was Bitcoin down some 20-25% towards the end of this year, end of 2025, if you're a Bitcoin treasury, that means your balance sheet is heavily dependent on the fluctuations in that coin, and you're being valued off of what might happen. And that's why you see that stock being down much worse than Bitcoin itself. That seemed like a good idea at the time as Bitcoin was soaring to $120,000 per coin. But as soon as that coin starts falling and as soon as there's doubts around the strength of the momentum with Bitcoin, which seemed to fall apart towards the end of 2025, you're going to see companies that are relying heavily on putting Bitcoin in its treasury. And that includes Tesla too, by the way. You're going to see them suffer even worse than the price of the coin itself.
Interesting. We got time for one more. So anything else you want to tell the viewers for this broadcast about the new year?
Yeah, well, there's a ton of things that could happen. It's going to be a very dynamic year. But as you and I have talked about on your pod and in other places, this tokenization of assets, of stocks and other real assets that are backed by actual things like either gold or the dollar or by a company's balance sheet, those being tokenized and being traded 24/6 on this new exchange in Texas, that is going to do some very interesting things to pricing. We're entering this brand new era where all of a sudden you have the real stock, which trades 9:30 to 4 plus after hours trading, and then you have the tokenized version of these stocks that are going to be trading 24 hours a day, 6 days a week at potentially different prices. What is that going to do to price discovery in general? I think we're in for a lot of discovery ourselves as investors as to what this actually means. That said, you go back to the very beginning. This is the fourth year of a bull market. Bulls that run this far usually do pretty well in their fourth year, despite the volatility we will see around midterm elections. You and I both follow Sam Stovall at CFRA. We know what happens during midterm election years. Expect a correction, if not worse. But this bull does have momentum, and that momentum is coming from those profit gains. A lot of the big stocks are driving that. Let's see if they can continue to run in 2026.
I appreciate your optimism there, Caleb. Great to start the year with you.
Thank you. Thanks for having me.
And coming up, what to watch at the 2026 Consumer Electronics Show, better known as CES. The Consumer Electronics Show, or CES, is set to kick off in Las Vegas. Investors will be watching and listening closely to commentary from top CEOs. Last year's CES featured a flashy, robot-filled speech from Nvidia CEO Jensen Huang, who is scheduled to deliver a January 5th keynote. Here with the top 3 things to watch at the conference this year is Yahoo Finance tech editor Dan Howley. Dan, great to see you here. What should investors keep in mind?
Yeah, Jared, as you kind of pointed out, the first things are going to be Jensen's keynote, as well as rival AMD CEO Lisa Su's keynote. Both of them will be speaking on January 5th about their various offerings. This is a consumer electronics show, so naturally you can expect a number of consumer announcements, consumer-focused announcements. That could be things like new graphics cards for gamers, new partnerships, things along those lines. But they've also expanded out to try to push more of their AI side of the business. So, last year we saw Jensen talk about the robots, as you kind of mentioned, their software offerings through Nvidia, as well as some of their future plans for smaller form factor devices, which they released this year, a desktop kind of AI server that individuals can use on their own. AMD did the same thing basically with their own event. And we're also going to be seeing some announcements from Intel and Qualcomm. So it really is going to focus primarily out of the gate on Nvidia and AMD. And then, AI hardware is going to be another large part of the show. We've had, companies like Microsoft, HP, Dell, any computer maker kind of discussing this idea of AI hardware when it comes to AI PCs. Not just that, though. You could see some wearables that are AI focused, maybe some pendants, things along those lines. There's sure to be some vaporware mixed in there, just products that get announced and then never really see the light of day, or they're just kind of looking for acquisitions down the line. And so those are some of the other products. And then, I think one of the other things that people really have kind of noticed over the years is the change for a lot of CES towards kind of an auto show motif where, an entire hall is dedicated to automotives, and not just cars, though. There's flying car concepts, different types of drones. And last year or the year before, there was a multi-ton Caterpillar dump truck that was supposed to have autonomous capabilities. John Deere is there. There's a bunch of different boating companies. So transportation in general gets a lot of love at CES, and we're expected to see more of that this year. Of course, AI will be a big part of that. Self-driving is a huge push, seeing a huge push. It's been kind of, one of the biggest announcements that we see at CES every year, or kind of the prediction of when we'll get actual full self-driving. There's still a bunch of kinks to be worked out if you've seen any of the latest news out of Waymo, but it is much better than it was. But yeah, it does seem as though this year is going to just be completely dominated by AI.
You know, I love that we're still trying to make flying cars a thing. It's only been about 70 years. Maybe it's going to happen this year. But I want to talk to you about AI and the broad picture for 2026, because AI is appearing in everything right now. And we're used to talking about large language models, or LLMs. Now I've been talking about small language models, or SLM, SLIM, with a number of guests. And that is, you can put these language models in a device and it can compute its own AI. That's one trend. But what are some of the others, or any comments on what I've said here?
Yeah, I mean, those smaller language models you'll see on things like those AI PCs. You know, Microsoft's been making a huge push with that. As I said, along the partner manufacturers, the HPs, Dells, things along those lines. Smartphone makers also lean heavily on those. But I think we'll just continue to see these kind of questions circle around the eventual payoff with AI, where this actually does go. And, you know, there's been survey after survey saying, oh, some companies are doing great when it comes to AI, when it comes to getting a return or seeing improved efficiencies. There's times we've seen things where it says, well, companies aren't really seeing a return. I think that's going to continue to be a big part of this conversation with regards to AI. Also, how much money is going to be funneled into it is going to continue to be a big part of the conversation. You know, the hyperscalers, hundreds of billions of dollars are being pumped in through data center build out. That's going to be a big topic of conversation, whether or not there'll be a pullback on spending if Nvidia can keep it up. But, you know, I think really it's going to be that kind of up and down that we saw over the last year, where, you know, there was this sense of everything's great, you know, euphoria reigns, and then kind of the storm clouds come in when there's any hint of bad news. I think it's going to continue to kind of be that way in this year.
That's right. And I think DeepSeek is a long ways in the past here, but that was about 10 months ago. And that just kind of threw everything for a whack there. But really great talking with you, Dan, and have a happy new year. And coming up, we're going to stick around with tech and hear from CEO Lisa Su. Do not go anywhere. Questions about an AI bubble are carrying through into the new year, but investors in the space fared well in 2025, especially those who held shares of AMD, up over 80%. Yahoo Finance recently spoke to Lisa Su, CEO of AMD, to discuss the state of an AI industry and their new partnership with OpenAI.
You know, when you think about where we are today, it is all about AI and how do we use AI to really impact every single industry out there. And the foundation of that is you need to have enough AI compute. And so, yes, what we announced today was a 6 gigawatt deal. It will be, you know, tens of billions of dollars of revenue to AMD over the next few years. And it's really an opportunity for us to even partner deeper with, you know, the clear market leader in AI. And so, you know, we're talking about building 6 gigawatts together. You know, the first instantiation will actually go into place the second half of next year. We see it ramping to, you know, double-digit billions of revenue for us. It's incremental from an AMD standpoint. And most importantly, it actually has us working together on the technology, because the technology is just super hard. There's so much we have to do to get it all working. And so bringing, you know, the best of OpenAI and AMD together is what this deal is all about.
A deal like this, Lisa, it doesn't happen overnight. You didn't wake up Sunday thinking, all right, we're going to announce this on Monday. When did you start working on it? And how? What was it like working with a Sam Altman to get this through the finish line?
Well, the key, Brian, and I've told you this before, the key in our world is it's all about roadmap. It's all about the technology. It's all about ensuring that we're meeting the performance capabilities for the most demanding foundational models. And that's what OpenAI has. I mean, they have brilliant engineers. Their models are used everywhere. And so this has been a process. It's been, several years in the making. It started with them testing our MI300 and doing some early work on MI300. That moved to MI350. We've done a lot of work on software. And, it's culminating in, they've given us feedback on what they believe best in class is. And MI450, which we have coming next year, is absolutely that. It's best in class, AI computing. And, the fact is, having a team that is, so much at the center of the global AI build out, being super excited to be a lead customer for MI450. I think it's a great thing for us. It'll push us to get the technology out even faster. And yeah, it's been a couple of years in the making, but we're super excited to be able to talk about sort of the breadth and the depth of this relationship, as it relates to our overall AI capabilities and AI business.
Lisa, I'm trying hard to make sure I got all these terminologies down correct. So bear with me if I get one wrong. So what would deploying 6 gigawatts, how does that change the future of AI, and what does that mean to the average person who's only now starting to come across AI agents on various platforms?
Well, Brian, it's a great question. I mean, I think we've all experimented with AI. People, think about ChatGPT and Gemini and asking it questions. But what we're seeing is this is really only the very beginning of people taking AI and using it for improving businesses, for improving research, for improving, all kinds of capabilities. And what we see is, to get more capability, you need more compute. So the work that we're doing is building the foundation of this AI world. And what we want is to make sure, like, every time you have something that you want to use AI for, there needs to be able to have enough compute on demand. And that's why we're talking about building multiple gigawatts. I mean, it is, once you build out all 6 gigawatts, I mean, you're talking about millions of GPUs. And that millions of GPUs will go towards every user having, sort of intelligence at their fingertips.
How difficult is it to build out this type of infrastructure?
It's incredibly difficult. Let me say, Brian, it is incredibly difficult. But we have been working on this for years. And, sort of our technology is really around the chips, about ensuring that, we are constantly looking for pushing the envelope on sort of the next generation. So we're really excited about our MI450 generation. It has 2 nanometer technology, so the most advanced fabrication capability. It has, rack scale solutions. So we're really putting all of these, compute elements together. And the way to think about it is it takes a village to build this all. So, we are, of course, very, proud and focused and dedicated on our piece of it. But it's us, it's our cloud service partners, it's obviously OpenAI and the model users. We all need to come together, plan this infrastructure together, make sure there's enough power in the world for all of this AI compute. And once we put it all together, we deliver just, fantastic capability to the world.
Is there enough power?
There is not enough, but we are actively building everywhere. I mean, this is, all about ensuring that there's enough power, certainly in the United States. I think there has been tremendous focus by this administration of ensuring that, AI is top of mind, and that's super important. It's ensuring that we have enough manufacturing capacity to do this. It's all of the above. And so I would say that the industry is coming together. I mean, this is one of those points in time where you need every part of the food chain to come together and say, we want to do this. We want to build fast. We want to build big. And we're all putting our best efforts, towards this big vision.
So much has happened since I last talked to you, Lisa. I mean, of course, this deal is very much front and center. We have the U.S. government now has a stake in Intel, which wasn't on my bingo card coming into this year. Some would say these tie-ups are causing risks to the AI industry or even the tech industry. What do you say to those critics?
Brian, I would say that that's probably thinking too small. I mean, you have to really look at, what the power of this technology can do for the world. And if you think about all of the applications that can take advantage of AI and computing and, sort of the massive investments that will have, significant returns on the other end, it takes time to build all this out. So yes, we are investing heavily. Some might say investing ahead of the curve. I actually say investing at the right pace because we want to accelerate. This is a place where when, companies and partners make bold moves, it will be rewarded because we will do things that you previously thought weren't possible. We're actually bringing the industry ecosystem together so that we're actually getting the best of each of our teams so that we can actually accelerate the rate and pace of deployment and AI innovation. So, I really believe that this is the beginning of a 10-year kind of super cycle, and we're in the very early innings of this. I think, Brian, I used to say that I thought the AI TAM just for silicon accelerators, sort of our piece of the business, was going to be, $500 billion. And some people thought, boy, that was a big number. And now maybe I've underestimated that number. And we have a lot of clear, demand across the world, for this infrastructure.
From air travel to cruising, how much will Americans spend on travel in 2026? We're getting to the breakdown from two sector analysts after the break. According to the International Air Transport Association, airlines are set to earn a record $41 billion, with 5.2 billion total passengers expected to take a flight. And here, with a broad sector outlook for airlines and some of the companies investors should be considering, is George Ferguson, Bloomberg Intelligence Senior Aerospace Defense and Airlines Industry Analyst. George, thank you for talking to us here today. Let's start with the airfares. Whether you're an airline investor or a passenger, that is top of mind for everyone. So what is the outlook for 2026?
Yeah, so as we look at the year as it starts to develop, and sort of bear in mind that we're looking at the first half air schedules, because we don't get much better data in the back half. But the first half, it looks like we're getting a lot of growth from the premium segment. The fastest growers are United and Delta, American a little bit less so. But we think that means there's going to be a fair amount of premium seating added to the marketplace. They're growing at above inflation levels of growth. So we're sort of seeing 3, 4, 5% for some of those carriers. And so we think that probably means there'll be a little bit of pressure on that premium segment. In addition, I think you're going to see other carriers like Southwest adding premium seating. Alaska, I think, is going to add some. JetBlue will add some. So again, it looks to us like there'll be premium seat growth higher than GDP growth, and we think typically that's going to mean softening fares there. In the basic economy world, we're seeing carriers cut capacity there. Some of them, like I said, switching to premium. Others having problems, like Spirit Airlines. We're watching them closely, right? If they've already cut back a lot of their fleet, I think they're moving from 250 airplanes to 100 or so this year. So there'll be a big swing factor here. But in basic economy world, I think we see generally slowing supply below GDP growth rates. Could be a firming of fares there in that business segment, which has been hit pretty hard in the last couple of years.
And let's talk about costs, where they have been climbing. We've seen wages increasing. What does that dynamic portend?
Yeah, so I mean, the airlines, I think still manage inflation in most of their cost base during 2026. The pilots will get something like a mid-single-digit raise during the year built into their contracts. And we're just seeing rising costs from everything from maintenance to gates. The big swing factor in airline profits in 2026 is going to be fuel. Fuel helped them in the first half of last year, sort of bolstered margins by 500 basis points or so, depending what quarter it was. We've sort of scenarioed out a $2 jet fuel price or $1.75. At $1.75, they get a bit of a tailwind. You could see slightly improving margins maybe in their business if you got $1.75 on jet fuel. Right now, we're seeing around $1.91 on jet fuel. When we look at sort of a $2 jet fuel for the year, airlines get less of a pickup from fuel, a little bit in 1Q, and it fades across the year. And I think that would probably put them in a down year from a margin perspective in 2026.
Interesting, and thanks for covering that. That was going to be my next question, but let's switch over to international. Talk to us about Asia Pacific, and I know you're citing international as a key risk here.
Yeah, so one of the markets that's really worked very well actually is European. We'll start at European. For the U.S. carriers, it seems like everybody in the U.S. wants to go on vacation in Europe right now. And we see a bit above GDP growth on European seats. And so we think there's probably a bit of softness in Europe. It won't be large, but a bit of softness. Asia's growing gangbusters, as you mentioned, but Asia is still recovering from pre-pandemic levels, right? They haven't totally achieved the seat count we had seen going into the region from the U.S. They haven't achieved the levels they were seeing prior to the pandemic. So Asia ticket prices, I think, still are pretty strong, although, again, we think that's probably softening. So the international scenario for U.S. carriers looks like softening fares there. would be a bigger challenge for United, American, Delta, those big full service carriers.
And before we go, we got a minute, so I'll just give you the floor. Anything we didn't get to that you'd like to talk about in your outlook?
Yeah, so I think near in Latin America, meaning anywhere you're flying with a smaller 150 to 200 seat airplane, sort of here, US to Mexico beach markets, Caribbean beach markets, still looks pretty competitive to us. So we think fares probably diminishing a bit on those in those markets. It's going to be the strong season here in 1Q. Everybody wants to get away. Here in New Jersey, it's 20 degrees this morning, so everybody wants to get away and get to a beach market where it's 70 or 80 degrees.
Oh, yes.
Longer haul, Latin America, probably less risk of that diminishing fare, just less capacity going to those markets to do maybe a little bit better.
All right, George, we're going to leave it there. Thank you for stopping by here.
Thank you. Yeah, thank you.
And shifting gears to cruises, my next guest says that the K-shaped economy is playing out in the cruise space with increasing divergence between luxury and economy offerings. Joining us now is James Hardiman, City Leisure and Travel Analyst. Thank you for joining us here, James. Let's talk about that K-shaped consumer because we didn't talk about that enough in 2025, but it's definitely a thing. And how is this affecting the cruise industry?
Yeah, so I mean, to your point, discussion of the K-shaped economy has become somewhat cliche. But if you think about the very nature of the leisure industry that I cover, nobody actually needs this stuff, right? These are not staples. These are not requirements. And so to the extent that there's increased pressure on that sort of value-oriented consumer, they don't have to take a cruise. They don't have to buy a motorcycle, go to a theme park. And so we're absolutely seeing that play out. Now, the good news is, I think the cruise industry, among the various verticals that we follow in the leisure space, is probably the best positioned. You're talking, even at the low end, Carnival is probably going to be the most value-oriented cruise line. You're still talking about, low six-figure type incomes. If you think about Royal Caribbean, you're more like, mid 100K range. Norwegian is going to be even higher than that. When you look at a company like Viking, you're talking about, six figures many times over. And if you think about net worth, you're overwhelmingly catering to millionaires. And so we've seen that play out in the numbers. The most recent report from Viking, they showed, a really solid advanced booking number for 2026. You're talking, 5-6%. But more importantly, that number accelerated, right? With so many of these other sectors, the concern is that we're going to see deceleration. Viking, which is truly the most premium of the cruise lines and really across, I think, the leisure sector, they saw a meaningful acceleration.
And talk to us about some of your price targets here that you have for the end of the year in these names that we're just talking about.
Yeah, so I mean, if let's take a step back. We are bullish across the cruise industry, and I think there's a number of different ways to get to the same place, which is meaningful upside. I think if you're going to swing for the fences, I think Norwegian Cruise Lines is a really interesting play. May not be quite as premium as a Viking, but they're towards, they're at the higher end of this list, and they're far and away the cheapest of these names. So it's, sort of a high risk, high reward type of a name. I think if you think about Carnival, which has been on our best ideas list for some time, not only do they have all the benefits of the cruise industry, which we've been extremely bullish on, but they've got some idiosyncratic benefits. They just opened a new island in the Caribbean, which should drive, meaningful upside as we think about 2026.
And let's shift gears a little bit to power sports and recreational vehicles. Company that you cover is BRP, ticker DOO, D-O-O. Used to be D-O-O-O, but it was changed a few weeks ago. Talk to us about this company, please.
Yeah, so they are we think one of the best makers of off-road vehicles. Think about ATVs, side-by-sides, and for that matter, snowmobiles. That is a sector that's been under a lot of pressure over the last couple of years. The good news is coming out of the third quarter and into the fourth quarter, we did see some industry stabilization, even some industry acceleration. And then on top of that, BRP is in a position, we think, to take meaningful share. And we think that's happened here in the fourth quarter. So the next report we get from them, I think there's as we think about sort of near-term plays, we think that's one of the best. But over time, we think they're in a really good position to cement their share positioning in the ORV space and even gain some share going forward.
All right, we're going to leave it there. But James, thank you so much for stopping by and sharing those insights. All your markets action is ahead. Stay tuned. You're watching Market Catalyst. It's time for this week's FAA Corner. The market is starting the new year on a mostly upbeat note. Tech stocks leading the way on Wall Street, but my next guest says there is risk with so much of the market's gains centered around tech. Joining us now is Patrick Mueller, Bella Advisors President. Great to have you here, Patrick. So let's talk about that concentration. I loved your lead off in your notes today. The market is acting like it had a double espresso. Do we have a caffeine hangover this year, or do we triple down on that espresso?
That's right. It's going to be an interesting year, Jared, and Happy New Year. And what we're going to see this year, I think, is going to be a big play from what we saw last year. Not as intense, I don't think, with all the tariff moves, Liberation Day driving down the market so much last year with all the tariffs. But we are going to see that coming into this year. And it's going to be really interesting when it comes to tech. There's going to be some type of catalyst, I think, is going to bring tech down. And in the long run, I really like tech. And we're getting good earnings from there, but I'd be paying really close attention to these huge players like Nvidia, making sure that they are lockstep with their earnings, because if they draw back on their earnings that don't meet expectations, then that could be a big pull down.
And we have seen that movie before, for sure. We've recovered. Do we do it again? Want to talk to you about a different segment of the market, and let's just talk Warren Buffett. This is the first day of Berkshire Hathaway that Warren Buffett is not CEO since the early 1960s, but that's a value play. And my question for you is, we did see some movement in the financials last year. They had a great year. Do we see the value play tick up this year?
I think we're going to continue to see that moving forward in financials with loosened regulations as we start moving forward. And I'm a big fan of Buffett because, how often do they get it wrong, right? And I'm sure he's got good successors. And they're sitting on a ton of cash right now, which I think a lot of people should be paying attention to. And they're probably just waiting to pounce whenever we do start seeing a big pullback and for good plays. But I like that for people right now because we're at all-time market highs, and there's never a better time to start taking chips off of the table and start diversifying and waiting for those opportunities to arise as we start moving forward here. So I personally like taking some of those chips off of the table, because you hear these phrases, Jared, that drive me crazy when the markets are down, that it's only a paper loss, but it's also only a paper gain, right? It's not a gain until you realize it either.
And until it's in your wallet. Very well said, Patrick. Let's
right.
talk about some of the investments coming home. I like that subject headline you're giving us here. GE is moving from China to Kentucky, and then you got some notes on Taiwan Semi, Hyundai, Apple, etc., onshoring.
With all the tariff stuff that's going on, one of the pro moves that nobody's really talking about is all the markets that are opening up around the world that we haven't been able to sell into as a country. So we're starting to see exports heating up, and I think we're going to see that moving forward. And that's going to be good for jobs moving forward and bringing those jobs back to the country. And I think it's just going to be a huge win for the U.S. long term when it comes to all those pro moves and companies coming back and companies overseas, right? Because we're not going to be tariffing goods that are made here in the States and starting to ship those overseas. So we're going to start making that move, and that's going to be really great for the country. And we're already seeing GDP heating up.
All right, I want to talk about potential headwinds, and there are some things happening in the consumer sector with refis, homeowners, and also credit cards. You're highlighting something called financial Jenga. Let's hear about that.
Well, what's happening that nobody's really talking about when it comes to consumer debt, it's at all-time highs. So the sales were really good over Christmas time, but it's all being financed. You got DoorDash financing people's food purchases, which I think is insane. It just shows you how much that's beating up on people's wallets over the last few years, because the price of everything has really doubled over the last few years, and people are hurting more than I think that is being led on right now. So we're going to see that come to roost, because you got people that right now, Jared, that are refinancing out of their beautiful interest rates, right? 2-3% interest rates, and the 6-7-8+% interest rates, because they need to get that money out and pay off those 20% credit cards and get that cash out because they're struggling. And we need to be paying attention to that, because at some point, that ship's going to come in and that bubble's going to burst.
Let's talk about another potential bubble. I'm not calling this a bubble just yet, but stick with me. I'm talking about precious metals. We got silver up 150% over the last year, platinum pretty close to that, palladium, gold up 60%. So what do you see in the future for metals this year?
I think we're going to continue, as we see a lot of this uncertainty, I think we're going to see a lot more going into precious metals, even though we're seeing big surges in it, and we might see a little bit of a pullback, but I think we're going to continue to see it rise, especially as the dollar is weakening. And I think we're going to see that until we can kind of get through this refinancing of debt that the government's got going on right now. So there you got trillions of dollars here in the first part of this year of debt that needs to be refinanced. And I think until we start getting past a lot of that stuff, I think we're going to start seeing a lot of money that's going into precious metals. And then I also like mining companies, looking out for those different companies as well.
And follow the central bankers. They have been buying gold for a long time. Patrick, great talking with you here today.
Likewise, Jared. Thank you.
And that's going to do it for this episode of Market Catalyst. More Yahoo Finance after the break.